Hey guys, welcome to today's market update. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Capital. Today we're going to take a look at the pound versus the USD, but as well the euro versus the USD. We're going to take a look at these two markets because we have some interesting reports out this morning. From the UK, we had the UK labour market report, and from the Eurozone, we had Eurozone industrial production. But let's begin with the pound versus the USD. And you can see here on this 30-minute chart how the pound has pulled back slightly following this morning's report. And the reason for the pullback is because wage growth didn't increase with the same pace as the market anticipated. The market anticipated wage growth, including bonuses, to gain by 2.3% on an annual basis, but instead the growth was 2.1%. And the market, which was already overbought, especially if you look at it from a daily perspective, has a very, very strong trend over the last few weeks. Needed a reason to book profits, and this was definitely a good reason to book profits. So far the market has pulled back a little bit. The actual pullback amounts to about 72 pips from the high, and I suspect this market can continue to go down lower, maybe touch the 132.25 level, which acted as resistance here on September 11th, and then maybe from these levels maybe the market is going to look to lift this higher. But again, the market has rallied quite strongly over the last few days, and the data point of today is not really that encouraging. It doesn't really cause me, at least, to get really optimistic on the pound at these levels. But for now, with the trend being bullish above this low here, which is 131.55, I suspect again that we might go down a bit more, but then potentially move up higher. And the nearest resistance level is 133.49, followed by 134.47. Next up is the euro versus the USD. So here's the market. It's pretty much unchanged today, not major changes at all. The Eurozone industrial production was out today and printed about 3% year on year. That's a very nice and solid number. It's really encouraging for the ECB to see these numbers. In fact, for anybody in the Eurozone, it's really nice to see these numbers because it does suggest to us that the European economy is doing very well right now. Correlations between the euro industrial production and Eurozone GDP is quite high, and again suggests that the economy is doing very good. Now, that's not really something though that the market necessarily trades on in a big way. Rather, it's more about the ECB, and the ECB of course are looking to reduce their quantitative easing as inflation is now not threatening to trend below the zero level. Rather, it's been quite strong lately, around 1.3%. And the ECB just wants to get rid of the QE, and then maybe in a year or two look to increase interest rates. And that is really what is driving the market right now. As well, of course, you have the situation in the Eurozone, in the US, with relatively low inflation and not a low likelihood of a Fed rate hike in December, but it's not as good as it could have been. Technically, I think the market, remains bullish. I've been bullish over the last few days, and I've seen the trend is bullish above this low here, created on the 6th of September. You can see prices creating higher and higher lows. And yesterday we bounced nicely from the 1926 level. I found it interesting that the market went down and then up and then down again and then quickly up, and now is stable here. So I suspect really that the market already bottomed out yesterday. Now, if the market for some reason will go down to 1950 and maybe down to 1924, I do think that the market could potentially just move up higher from these levels eventually. So I think down and potentially up higher. For now, as long as you trade about 119.04, I see no reason to change my bias. Again, the next resistance levels is today's high of 1996, followed by the 120.30 level, followed by last week's high of 120.93. And with this, guys, I want to thank you so much for watching. Don't forget to subscribe to our videos on YouTube at TradeCaptain.com, and as well, don't forget to follow us on Twitter for more videos and news like this about the currency markets, but other financial markets. Thank you very much. I'll speak with you guys soon. Thank you.